All right, everyone. Here's my chart for today, July 18th. I want to go over a little bit of what we did today. We did take two trades. I took this one here, jumped in at 13.05 quarters and got out at 13.0675 for a six tick gain later on, and that was right away. I think I got in at 8:37. Um, this trade was taken to the short side, got in at 12.97 quarters and got out at 12.95 quarters here. And I'll explain each of these trades and I'll show you how this works with the daily levels. Basically, the market opened up here. It gapped down and it made a low here. Basically, it made this low, came back up, and this is not a trade I suggest you guys take. This is a little more advanced trade, and I use momentum and the jump to get just experience to get into this, and I knew I was only in for six ticks. These bars are, it'll move really quick on you, and I don't suggest doing it unless you know what you're doing. Experience is key here. Basically, jumped in here at 5.25. A minute later, I got out at 6.75. This is not a trade that you would take long wise. Hopefully, I would have liked it to set up and come close this gap, but that's not what I was looking for. These are quick trades that I usually just take if I see something set up. Basically, the market came down here, and if you look down here, it ended this bar here at a low of 3.5. If you look at the daily levels, 1303 was a level, so I knew there was some support right here. As soon as it made this peak here and this bar started happening, as soon as this bar took out the high here, I jumped on board, and I knew I could get six ticks out of it, and I did, and I got out, and I was happy with it. I'm not looking to hit home runs. I'm looking to hit singles and doubles, and that was a very good single without any heat. I didn't take any heat at all on that guy. The market made its top right there, and it started on its way down. Um, you know, this kind of market will frustrate a lot of people because um, they want to catch every turn. They want to catch this big move. I mean, this move was from 1308 all the way down to 1296. That's 12 points. Um, I didn't get any of that. I didn't care. I got my six ticks. I was happy with it. Another level that was on our daily levels. I'll move this in here. Our daily levels here. You see, 8.5. I put potential battle. A lot of fighting here. If you look here, the market came back up, and this level here, right here, 1308. Um, the longs or demand couldn't take that level out, so I knew it was going downhill. Um, this was a perfect short to take. We didn't take it. I took this trade. I got out and I did other things, and I didn't take this move. I didn't want to chase it. I looked at it about right here when it was about to break out from this. I don't chase the market. I let the market take me in, so I didn't bother with this trade. I said there was many other opportunities. Um, did not take the trade, but it was a good healthy move. If anyone of you guys took it, congratulations. This is another good point to take it because it retested. It broke out, came back up to this level here, and it retested it, and that was a perfect place to get in, to take it lower. But if you did it, no harm done. A lot of people and a lot of traders would get frustrated and feel like they lost a move. They would chase the market. They would get stopped out because they would use short stop losses. It's not the way to trade. As we came down, we made a bottom here, um, and then the market retraced up. When it retraced up, it started getting quirky right here. A lot of misdirection, a lot of I don't know what's going on. If you look at the supply and demand here, it started. There was a lot of supply pushing the market down, and it started dwindling. And over here, there was nothing going on. They didn't know what they wanted to do. And that's where I set up for a perfect opportunity. The market was going sideways here. I saw these levels, these little peaks here. So I set up my channel of what I wanted to do. I like the market to take me into a trade. I don't like to trade the markets. I like the markets to put me in based on what they want to do. I don't need to predict the markets. I think there's a lot of traders and a lot of websites out there that tell you, oh, we can predict based on 80% probability of XYZ indicator, the MACD over the RSI, and blah, blah, blah. I don't like to do that. I like to look for these opportunities right here, and I like the market to take me in. If you see these two horizontal lines, I put a long order, long stop, buy stop up here at 99 3/4, and I put a sell stop at 97 1/4. The market was in here at this point. Didn't care if it went up, didn't care if we went down. Either way, I was going to make money. Basically, I let the market do its thing, let it decide where it wants to go, and then jump on board. I let the market go down. It took me in, and I got in at 97 1/4, just where my sell stop was. It took me in. I didn't take any heat at all. I had this for 8 ticks, and I basically got out at 95 1/4. And if you see right here, 95 1/4 was a support level that I had put, and that's the reason I didn't let it go on longer. I could have let it come back and retrace, took some heat, and then come back down, and would have made more money. I plan my trades as I plan my trades. I don't get in a trade and say, oh, I just wanted 8 ticks, but now I'm going to go get 12 because I see the market starting to move and creating more momentum. That's not what I planned. That's not the discipline that I initially had, and that wasn't my trading rules. So I don't care about the 8 other points that I didn't get. So basically, I got in the trade here. I canceled my buy long entry up here because it went to the short side. I got out here and I made 8 ticks there. So 6 ticks there, 8 ticks there for 14 ticks. That's 3 points and a half. Is that plenty for anyone? I mean, I basically showed you just the other day that all you need is a point and a half, 6 ticks a day averaging, and you'll be successful trading. This was a little more. I was done with trading when this happened. I got done. I made the video. I posted it up there, and I did some other stuff. There were some other signals here. This one here, this is my ESP indicator. It indicated to the long, basically never triggered because we're on a confirmed downtrend, so we're obviously not going to take this trade. This ESP to the short side did signal us, and it did trigger on this bar. And look at here, we would have jumped in there quarter point lower than that bar. We would have got a good 8 ticks off of that guy too. Very, very accurate signal there based on the information. And as you can tell here, we were getting flat, so we would have took that with conviction that was going to happen. And we're coming down a level. So basically this came down, went up to retrace, and then it was coming down even lower. And that was basically what we did today. If you can tell, the market shot back up and retraced a little bit. Some other levels that were pertinent. If you look at the daily level sheet, you'll see that some of the levels we talked about there, the market just shot through. Other levels, it was spot on. The 1303 level, like I said, was a good level to be at. The market went down. Notice how this level here, right here, 97 quarters, around the 97, 96 range was a key level. That's an interesting level. There's a lot of fighting here. There's a lot of fighting here. The market didn't want to pass it. Came back up. A lot of fighting here to break out. Came back and retested it. A lot of fighting there. A lot of fighting here. The market didn't know what it was going to do. The same thing we did here in this setup could have been done here. Notice the market doesn't know what it wants to do. Stop there to get into the market. And the market would have actually gone down, and then it would have retraced. You would have got out there for, you know, a point, maybe a point and a quarter loss, um, taken some heat, but or you could have reversed it right there and came back up. But at this point, the market wasn't doing anything. It did make a higher low, so it was on its way up, but it was it pretty much went sideways. So here it came back down on this same level, and kept it from breaking back down again. So this level here, you'll notice tomorrow is an important level for us, around the 97 range, 97, 96 and a half. Very, very important range. There'll be a lot of fighting potential battles there, if the market does get to go there again. So, and it's pretty close, depending where the overnight session goes, but there's a lot of action going on there. So that's basically what I wanted to show. This is how we do it at eminipicks.com. 14 ticks today. It was a good day. Pretty much got done trading. My last trade ended at 9:54, which was right here where I bought the cover. I was done by 10 in the morning. This was a good trade based on what you've learned from us to take. This one's a little more aggressive that I like to take. I know the market was going to come down. It did gap down. It came down and made a low, and it was high probability that I was going to at least get 6 ticks. If I didn't, my stop loss wasn't anything. This bar here, let's see, this bar here, the low was 3.5, and the high was 5. So it was a 6 tick. It was a 1-to-1 ratio. I had not, it was a 1-to-1. I had nothing to lose. The market did have a little momentum, and I knew I could at least get 6 ticks from it. Once it made that bottom, it was going to shoot up, and I knew resistance was at the 8 level, so I knew I could pull it out. So that's basically what we do. I apologize about the website. We switched it over to the new website, and we're having to recreate a lot of these old videos and training sessions. So I'm trying to make my videos a little bit longer to show you a little bit about how we go about looking at the markets. A lot of supply and demand, a lot of price action, looking at where the market is. Another thing you can see here is as this market started coming down, these peaks aren't making lower lows. If you see this right here, this is the lowest peak before it reversed here, this reversal here. The low was actually the supply or the pressure to come down was a lot less. It was really on its last leg, so that was a big indication of it's losing its steam, and you could have, with good conviction, would have been able to take this trade coming up, at least get some points, and you would have never really taken any heat. You would have jumped in here, got here, maybe 2-3 tick heat after a few bars, but nothing major. You would have never taken that big of a hit. And if I look at my accumulation of institutions or and retail traders, I definitely, looking at my other charts, I would have actually seen a lot of action here, and we could have sort of seen that putting our stops there, the market would have took us in and then rode us up. So that's basically what we do. Bear with us on the new website, and you got any questions, email us at george@eminipicks.com, george@eminipicks.com,